So, good evening, everyone. Thank you so much for joining. Okay, Sahil is also here. So, good. So, thank you, everyone, and good evening to all of you who have joined us here on a Monday evening after a hectic days of work. So, thank you very much. But we promise we're going to keep this session very value creative and very crisp. And I'm sure you'll have something to take back once this session closes. So today we are discussing a great investment opportunity in an alternative investment, a secured opportunity, and this is being brought to us by the Earnest Me group. And today I have with me Ashish Khandelia, who is the founder of Earnest Me, which is a venture of Certus Capital. And along with him, Sahil Shah, who's the director of the company. And Ashish has over 2 decades of experience in real estate, and he was earlier with KKR and Morgan Stanley Real Estate. So, a wealth of experience in this field. And Sahil also has about 1.5 decade of experience in acquisitions and has recently joined the group. So, welcome both of you, Ashish and Sahil, and thank you so much for uh, you know educating us on this opportunity today. So, I hope I am audible and clear, and uh, you can hear me fine.
Yeah, thank you, Shaina. Thank you so much for the introduction and inviting us here today. So yeah, so we can very clearly hear you. Yeah.
Great, great, great. So, Ashish, while we had interacted initially, even I was not aware about the existence of this group. So, I'm sure all of us would like to know about Earnest, the group, Earnest.me, the website. What is the team, and what are you guys exactly doing?
No, sure, Shaina. I think let's start with that. So first of all, thank you everyone so much for joining and taking the time to have this discussion here today. So Earnest.me is a platform, that we conceptualized last year. Basically, the whole thesis behind this platform is to make opportunities, investment opportunities that are generally available only for institutions to invest into. We wanted to make those available for a much wider audience. And I will give you a little bit of background as to how that has come about. So all our careers, me, Sahil, my other colleagues, Sandeep, Siddhant, etc., most of us have been in institutional real estate investing. So we have been working with firms like Kotak, Morgan Stanley, KKR, Piramal, etc., investing into uh, equity or debt of firms generally engaged in the real estate business. But while we had been doing all of this thing all our lives, for the most part, even we at an individual or a personal level didn't had much opportunity to participate in these things. A lot of these opportunities are secured debt. They typically have a higher return. These returns are typically anywhere between 12 to 17%, and they're backed by physical assets. It could be real estate projects, real estate assets, land, etc. And and that's what as an individual I would like to participate. Of course, I need to have an understanding of what it is about, but those opportunities were not there. So in this context, we thought, why don't we create a platform like this? So to give a little bit of a background, 4 years back I left my last job, which was with this firm called KKR. KKR globally is a very large investment manager. They manage close to $500 billion of of investments in all kind of things: private equity, real estate, infrastructure, etc. So I used to lead their real estate lending business. While I was there, we had done almost close to $1 billion of investments as a team. uh, Earnest.me team, we have about 15,000 crores of real estate investing and lending experience. So we founded this firm about 4 years back with an idea of trying to bring some of these opportunities to domestic as well as foreign investors. For the last 4 odd years, we have advised several global investors in closing about 2,400 crores of opportunities similar to what we are talking about today. And then last year we started conceptualizing this fintech platform, where very similar thing that we had been doing all our lives, we bring that here and make that available. So that I think is a bit of a summary. The only other thing I would like to add to this is not only we bring these opportunities here, the whole thing is that we as a firm also invest into these opportunities. So what we are talking about today, we have already invested into this thing, and we are making it available for co-investment of others. So it's just not that we review them, what we like, we put it up here, but we also put our money where our mouth is in these kind of opportunities.
Perfect. Ashish, thank you for that, very clear introduction. So you've mentioned a lot of time opportunities. So we have a lot of retail investors who would not. Can you break down this opportunity? What exactly is the backend firm investing into, and what is what are you investing into? Just break down this opportunity for better understanding of the retail investors.
Sure, sure. Uh, so to super simplify it, it is like so. At a broader level, people typically invest into either equities or fixed income investments. Fixed income being your FDs, your debt mutual funds, your bonds, tax-free bonds or bonds of, various government entities like NHB, etc. So similar to that, of course, there are a lot of corporate bonds also that are available. Now in India, mostly the opportunities for investors had been in AAA corporate bond, like a bond of a Tata Group or Reliance and so on and so forth. And that also in a very limited way. Now, what the investment that we are bringing on Earnest as a platform is something that we have a core expertise in, which is really investing into real estate companies and projects. Uh, and we are providing them secured debt. So typically, if we are making an investment of, let's say, 100 rupees, we want to ensure that the cash flows that are expected from these projects are at least 200 rupees or more. And this 100 rupees is secured by the assets of that company. It could be land, it could be project, it could be receivables, cash, and also generally speaking, we take personal and corporate guarantees of the groups whom we are investing into this thing. So these are fixed income secured debt opportunities of typically real estate companies and projects.
Okay, okay. So that makes it more clear. So, Ashish, is a concern that is always there with any investor is about regulation. So we have the SEBIs and all of them in place. So, can you tell me how this platform is regulated, or is it regulated or not? If yes, then how is it regulated?
Yeah, I think that's a good question, Shaina, and a pretty important one. So as a background, as a firm, we are regulated both by Reserve Bank and SEBI. That is because as a firm, as Certus Capital, we have an NBFC license, which is NBFCs are regulated by RBI. And we also have an alternative investment fund, an AIF license, which is regulated by SEBI. And in addition to that, we have created this platform, Earnest.me, which is a venture of Certus Capital. So Earnest.me is more of a fintech platform that presents opportunities for people, for potential investors to look at. And if they like, then they can participate in that. So whatever is applicable today as per current law, like an IT Act or a company law, etc., those things, of course, we comply with. But to be very honest, most of the regulation relating to regulation of fintech platforms in general, including something like an Earnest.me, are still evolving because this is all new spaces. All of this thing has started happening over the last 3-4 years only. So we are kind of looking at that, and as and when something comes up which requires us to comply with something, we're going to comply with that.
Okay, wonderful, wonderful. So, Ashish, without further ado, we would like to jump on the opportunity that we have been discussing and talking about and writing about. So can you explain what is this current opportunity, this fixed income alternative investment opportunity?
Sure, I'll just give a one-liner background to this, but then I will request my colleague Sahil, to talk about it in a little bit more detail. But at a very high level, it is, as I mentioned earlier, it is a fixed return opportunity that provides a 16.1% IRR. So this IRR is fixed. It is not linked to any kind of rate realization, etc. So it's a fixed return. It is also secured. So it is secured by by the land of the company, the project that is going to build on it, the corporate guarantee, the personal guarantee, and the pledge of shares of the company. And most importantly, it has been given to a group that's called Arun XLO in Chennai, and that group has a history of 35 plus years of doing this business. So they do real estate and infrastructure development. They have delivered more than 65 lakh square feet over these years, having delivered more than 7,500 homes, and they have various different verticals. That includes affordable housing, which is where our opportunity is. That includes uh, townships, that includes senior living, which is more like a retirement community. It also includes hospitality. And then they also have industrial fabrication. So a group which is in various different things, having been operating for a while, and we are doing a certain kind of set of projects in there. So that's kind of the group background and what is the overall way doing. But Sahil can dive deeper into what's underlying the specific theme.
Right. Thank you, Ashish. In terms of the
I'm
specifics
sorry, just a second, Sahil. Ashish, I'd request you to just go on mute while
Yeah.
Sahil is speaking, otherwise there's a lot of echo.
Sure. So, going further into the specifics, of the transaction, this the underlying projects of the assets are four affordable housing developments in Chennai. These projects are located in and around ITES hubs, which is OMR in Chennai, and manufacturing hubs, which is which is on the on the southwestern side of the city. So in that sense, these are well located projects, catering to the two engines of the economy in Chennai, which is largely driven by the old economy sectors, which include export oriented manufacturing, which is sectors like automotive, hardware, electronic hardware manufacturing, and second is the new age industries, which is your ITES industries, and data centers and the like. So these are very straightforward 1 and 2 BHK projects offering 1 to 2 BHK homes, which are 16 to 40 lakhs in terms of ticket size, so fairly affordable, which is appropriate for the market. Now, and lastly, the developer has experience in doing these. He has developed 20 lakh square feet, which equates to 3,500 homes of this very nature over the course of last 8 to 10 years. Now, in terms of the specifics of the opportunity, this is a total, financing or a deal size of 40 crores, with which is closed and available for immediate participation. The minimum investment, for any investors is rupees 10 lakhs. With the overall tenure of the instrument of 3 years, door to door, with the servicing for this instrument, which is interest, is done quarterly, starting from the first quarter itself. The first interest payment date is 15th of April, which is about a month from now. and the principal repayment start from quarter 7 and go up to up to the end, which is the 36 months.
Okay.
With that, I'll pause.
So, Sahil, I think I'm going to come back to you with a detailed, repayment, this thing. But the first thing that, once you've explained us the opportunity, the first thing I'm sure it's coming in the mind of everyone. And at that point, I'm just going to stop for a second. I'm going to tell everyone that we are going to take live questions towards, in another 20-25 minutes. And then please feel free to ask your questions then. I'm sure because I'm getting a lot of requests for questions already. So let's just wait, and maybe during our discussion, a lot of these doubts will already get clarified. So yes, coming back to this, Ashish and Sahil, real estate is a very real estate is a big well, actually. It can be a well of opportunities. It's also a dark well where somehow we never end up knowing where the money is going. So, I mean, they have this thing of just getting shut down. Real estate projects have this thing of just getting shut down. Either it's a lack of money or some regulations or even some permissions, some municipal issues, and they will just shut down. And so, isn't it a bit risky to give funds to a builder, and it's being focused over there? So uh, how does an investor feel secured in this kind of an opportunity?
I think that's again a very relevant question, Shaina, and a very pertinent one from an investor's point of view. So you're right. I think there are enough and more mishaps that has happened in real estate projects and financing and all that, which causes this kind of a concern. And without a doubt, I would say that it is a specialized investing and financing area. So while it intuitively looks very simple, okay, you're making houses, most people know what are the price of those houses, etc. But yes, you really need to have a fairly detailed understanding and assessment of right partners, right markets, right product within those markets. What is the regulatory assessment of that project? Are there any risk from an approval or title point of view? Is the financial closure there or not there? And whether this project will get completed properly and in time. So, I mean, all of those things and aspects are important when you're analyzing any project. Now, in one way, the reality is uh, that across any investment spectrum or any kind of an investment area that you would look at, you will have a variety of different things. Like in equities, you will have great stocks, and you will have stocks that are a little bit more riskier but provide you more return. And then there are stocks that that people will end up investing in just hearsay, and then they will end up losing their money. So I think real estate as such is no different. At the same time, if you do invest into real estate in a systematic manner, there is a pretty decent return that is there to be made while mitigating all these factors that we talked about. So let me give you some stats and things. Point number one is that while we all see a lot of these issues and we hear a lot of negative stories around it, over the last 5+ years, foreign institutional investors have invested more than $50 billion in Indian real estate across all kind of things. They have invested in buying assets, they have invested in developing assets, they have invested in the credit of real estate projects. So it's a very large sector which is growing. I mean, there was a recent story where I think the investment in 2021 or thereabouts is 2x the year before, right? We had been working after leaving KKR since we started Certis Capital. We had been working on various different deals. So during this period, foreign investors have invested close to 20,000 crores in opportunities, which is similar to what we are talking about today. And I mentioned this earlier. Within this space, we have been directly involved in advising on at least 2,400 crores of similar opportunities. Now, this is very sophisticated money. All these guys target high teens returns, anywhere between 17 to 20% return when they're doing this business, and still they're doing this at this scale. So the reason I'm saying all of this is not to say that there aren't risks, but to say that if you can understand those risks properly, and if you can structure around those risks and lay down an investment which is reasonably evaluated, there is money to be made, and avoid all those mishaps. And enough and more of smart capital is doing that as we speak. That was the whole idea of creating earners, that as an individual investor, you should be able to come and you should be able to invest with a team of experts who exactly know how to work around this. So that's the broader concept. Now, to your point, when we go about and when we look at these opportunities, we are basically digging into all these years of experience of doing it. So, as a team, combined experience between our various directors, myself, and other team members exceeds 70 plus years, right? And across 15,000 crore plus of investment. So we have gone through this exact cycle of looking at these various things, and let's say if we take the example of this particular opportunity, our projects, this is a 4 project portfolio. All these 4 projects are either fully approved or whatever is left is routine in nature. Our lead investor, which is Certus Capital and BFC, has done a thorough diligence for itself, for its own investment, and they appointed a technical advisor who is an expert in this field. Now, this is the same advisor that we have used on many of our deals while I used to work with KKR. This is the same advisor who was used on 1,000 crore investment by an investor in a Bangalore-based developer that happened last August 2021, and we were advising the investor on that. So we are not cutting any corners in terms of people who work for our NBFC in doing this diligence. Similarly, we appointed one of the very large property consultants to do a bit of a market survey around that, to also understand the market and the fit of the product within that. Most importantly, we are also looking at the experience of the developer in delivering similar product. So we are going through all of those kind of things. The second point, which was to your, okay, the money goes in, but where it is being utilized and whether it's being utilized properly or not. So again, I think a lot has evolved. And this is the difference that happens when a lot of HNIs and all that have done it in an informal manner, and then there is no way to track it. It's just purely based on trust. Versus in these kind of settings, where all of that money flow happens through escrow, like Axis Bank is the escrow agent here, and it gets monitored.
Okay, Ashish. So that's a wonderfully lengthy this thing that we know that a lot of due diligence has gone into this from your end, and it's your experience that is counted. And as initially you told us that you do have your skin in the game, as the team itself has invested in it. So that's this thing, but we are calling this deal a secured deal. So how are you securing it? I mean, what is the medium of securing this deal?
Sahil, you want to take that?
Yes. So this particular transaction, has security of has multiple securities. One is the land and buildings, for the 4 projects that are underlying are secured towards the issue. Second is all the cash flows from the project, or receivables as we call them, is also hypothecated or charged to the investors. In addition, the promoters are giving a personal guarantee towards this. Then one of the large group entities of the group is providing a corporate guarantee. And in addition to all of that, there is a full escrow mechanism, through which the debenture trustee controls the cash flows and the utilization of those cash flows. That is, the utilization can only be towards project construction or investor servicing, which is paying debt, paying interest and principal back to the investors. So all of the securities, are held by the debenture trustees for the benefit of all the investors.
Okay, okay. So now I come from a very, the next few questions are completely as a retail investor. So I have, as you said, the minimum ticket size is 10 lakhs for this particular deal. And as we had discussed earlier, I think for your future deals, you're trying to make the ticket size lower. But for this particular deal, it is 10 lakhs. So if I come as a retail investor, with 10 lakhs, what is, firstly, how do I invest that 10 lakh? Is it an upfront thing, and how does that get invested? What is a lock-in for that? I mean, how is it 1 year, 1.5 year? For how long does my money get locked in? And thirdly, what you were saying earlier about interest payments. So if I have given you 10 lakhs, could you structure and tell me, okay, this is the amount you'll get after 1 year, 1.5 year, 2 years, and 3 years? This will really ease out a lot of questions that we might get later on.
Sure. Firstly, if when is the money to be invested? For about 63% of the committed amount, which is in this example is 10 lakhs, is to be invested upfront. The balance 37 odd percent is will be called upon over the course of next 12 months, and this will be in two tranches, and it is determined based on the construction progress and the project requirement. So that's on the investment quantum, on the investment timeline. In terms of how this money will be serviced, i.e., when will the interest and principal be paid for this investment? So the interest, the total return on the transaction is 16.1% IRR. Out of that, 11% IRR is serviced from the first quarter itself. So the interest is paid quarterly here. The first interest payment date is 15th April 2022, and then 15th July 2022, and so on and so forth. So this 11% is serviced for the first 4 quarters, which is year one of the investment. From year two onwards, the entire 16% IRR is serviced or is paid on a quarterly basis. The 5.1%, which is not paid in year one, that is paid back with interest on that interest, along with the principal repayment, which start in the 7th quarter, which is 15th October 23, and are in quarterly installments going up to 15th Jan 2025, which is roughly 3 years from today, right? So this is how the interest and principal will be repaid. Coming to your next question on what is the lock-in for investors, there is no lock-in that is mandated in the instrument. So in theory, you could invest today and sell that debenture to any third party the very next day. Having said that, these are illiquid instruments. So going in, you should we advise all investors to think of this as a hold to maturity debenture, which means that they're holding the debenture for the entire life of 3 years. So just one clarification: the sale of debentures will be on a secondary basis. It is not that the company will redeem the debentures. The company is obligated to pay basis the repayment schedule that I described earlier, though investors can sell in the secondary market.
Sahil, is there active buy and sell happening in the secondary market for these kind of debentures?
No, while we intend to have a secondary market on our portal over a period of time, These debentures are not liquid, so it will not be easy. We will facilitate that on a best effort basis to try and find an investor through our investor base, but that's on a best effort basis, and usually these tend to be illiquid in nature.
So, Shaina, basically, we would recommend an investor should only invest with the horizon of this principal getting paid back between 18 to 36 months, which is the standard tenor. So while they are not locked in, they are transferable, everything is there. But given there isn't a illiquid market, I wouldn't recommend someone to coming in unless he has that view of holding it.
Okay, got it. Got it. So,
And also,
yeah,
just to say
go
that
on.
while Sahil explained how it is, on earnest.me website, there are examples available which lay down exactly if you invest an X amount, how does that come back, principal and interest. Yeah.
Okay. So, Ashish, I have coming from a very equity and debt sort of a background, I would, want to bother you with this question that except for a particular percent here or there in the interest return, how does this opportunity fare better compared to a debt fund, a credit risk debt fund, or you know uh the debt funds that come in this range of 3 years?
Yeah, I think it's very, very different in our opinion. So basically, what we see is that as an investor, as a retail investor, we typically have only these two options. Either you can invest into equities, which are volatile and more growth driven, as opposed to current income driven, or you can invest into FTs and debt mutual funds. Now, between FTs and debt mutual funds, typically, even if you take a slightly higher risk credit oriented debt mutual fund, typically those returns cap out at 7-8%. Okay, and FDs typically from any decent bank are like 5-6%. So on a post tax basis, across these two instruments, you're talking about somewhere between 3.5 to 5% of total return. Right. So point number one is that, of course, uh, you know, the opportunity that we are talking about is a significantly higher return compared to that. Is this riskier than FD? It is certainly riskier than FD. So you should think about it as a somewhat higher risk, but a substantially higher return, very clearly. Compared to a debt fund, also, I think the returns are much higher. Debt funds, of course, are going to be a lot more liquid than this kind of an opportunity. This is more illiquid, as we just explained. So you're trading off return versus some bit of a liquidity. The perception of these kind of opportunities will also be higher today because these are newer instruments. People are not used to it. Now, if you will ask me as an individual, I'm a lot more comfortable doing something like this than a debt fund because a lot of debt funds also end up taking credit risk for which you're not getting fully adequately compensated. And when things went south, even they suffered, like we saw in 2020 and 2021. Right. So it's not that those credit risks are not being taken. Here also we are taking a credit risk. It is just that historically these kind of opportunities have remained the purview of institutions who have been doing this as a matter of fact. And now, because of these fintech platforms, there is an effort to make that available to a broader public. So people should allocate appropriately. So they not saying they shouldn't do debt mutual funds or they shouldn't do FDs. It is just that if you have an X amount of allocation into your debt portfolio or something that you wanted between debt and equity, you could think of allocating a little bit of money into these kind of things. Understand, appreciate how they work for you, and over a period of time, our hope is as people see these perform, they will realize that they are not necessarily more riskier than debt mutual funds, but can offer more return.
Okay, wonderful, wonderful. So yes, allocation definitely is very, very essential no matter what kind of securities we are in and what kind of asset classes we invest in, especially as retail investors. So, Ashish, could you once again? I think you shared this initially, but there was some, we have a lot more people now. Can you please explain once again as to how much money what is the worth of the entire project? How much money is Earnest investing, and how much of that opportunity has been booked with you?
So yeah, so the total deal size is 40 crores. Uh, Initially, this entire deal has been funded and closed, which was in the middle of February, by our NBFC itself, which is Certis Capital, and then it has been made available for people to invest into. What we are going to do as a permanent hold, or basically the money, our NBFC money and our team's money that is going to remain invested into this deal from day zero till the very end, is going to be at least 10%, and more likely more than that. So at least 4 crores or above will be always held uh, by our NBFC and the team in this transaction. As we stand today, about 60% of this opportunity, including the money that we will hold into this, has already been invested into by various investors on the platform, which has happened over the last 20 odd days. And we are expecting that the balance 40%, which is roughly about 15, 16 crores, of that is left for investment, and that should get taken up over the next few days.
Okay. So once my money goes with the Earnest and you have this opportunity closed, what is your active role, as a Earnest senior team in connection with the project? How will you be involved are you overlooking the project, or how will you monitor it and that it's going in the right direction and it's not, going awry?
Yeah, so very clear. I think that's again very important, and the overall monitoring is going to be a critical aspect, right? So just let me just first summarize the monitoring framework. So as Sahil mentioned earlier, all the security, including the money that we are investing, or anybody you can invest, or it doesn't matter whether somebody has invested 10 lakhs or 1 crore, all the security and the documentation is held by debenture trustee, which is IDBI Trusteeship Services Private Limited, Trusteeship Services Limited. Uh, so debenture trustee is the primary body to monitor the project. In addition to that, two independent monitors, one who is a technical monitor and another who is a escrow and cash flow monitor, are appointed, and they quarterly review the performance of the project and report back to the trustee. Uh, Earnest platform also acts as a facility agent, which means that we assist the trustee and the monitors in making sure that everything is kind of being reviewed and being reported. Our Earnest.me platform will have a portfolio section where any investor who invests will get periodic updates at least once every quarter in terms of what's the progress of the underlying project, and also what's happening with their investment as to when is the next money due, what money has already given, etc., etc. So all of that is happening. I mean, so this is the overall monitoring framework. So there is a fair amount of monitoring and governance that kind of goes on. Uh, as Sahil has earlier mentioned, all the money that are received are passed through an escrow, and that money can only be utilized for the purposes of the project or for returning the money, principal, and interest back to the investors. Developer is not entitled to take that money out to any other project or for his own use till the investors are fully paid back. So this is the overall framework. And then the second other point is, as we mentioned, that our own investment remains invested. So like any other investor, we are as focused on making sure that this is getting properly monitored, and our investment, and therefore all other investors' investments, is safe and being properly reported upon.
Okay. Thank you, Ashish. Another question that came to my mind while you were answering this, that of course you are, you're a very professional team who will be monitoring the progress, but you know, uh, God forbid, if there is some sort of a default or say some issue that we cannot probably foresee right now, uh, what happens to the retail investors' money? I mean, does the period get extended, or how what to expect in that case in case of a default?
So see, I think if in case of a default, let's say a default has happened, like any other default that you will deal with, there are two, three ways in which a default gets treated. So first line of defense really is that, is this investment a properly aligned investment? What we mean by that is, does the developer has a lot of money behind all of us investors, like and when that is the case, he is incentivized not to let the project go into any litigation or problem, because not only our money is getting stuck, his money is getting stuck. So in this case, our assessment, or basically the lead investor, which is Certus Capital, their assessment has been that we have almost 2.4x cover on the investment that we are making of 40 crores. So there is a fair amount of money that the developer has to get. Now, despite that, there is a possibility, that if tomorrow there is a default, what is the nature of that default? Is this a temporary delay, or is there something that has gone wrong because he is not executing properly, or whatever that is, right? So if it is a bit of a temporary delay, of course they have to pay a penalty, which is 3%, and service that. Not that we want that or we are going to allow that, but that's the recourse that is there. But for whatever reason, if the interest is not coming through, or the principal when it is due is not coming through, the debenture trustee is in its right to create to go and enforce against all the security that we talked about, which based on third party independent work that has been done, provides significant cover, and you can follow the legal recourse to recover that money. So which is, I think, the worst case scenario, where you have to actually go down that path. But generally speaking, and this has been our experience in the past of doing deals, when you have aligned interests, typically you will get your money in time, or if you don't, if there is a small delay here and there, you get it with this additional interest.
Okay, sounds fair enough. So, one last question, Ashish, before we give this platform to the audience to ask you questions. When is this deal closing? I mean, how long is it live for?
Yeah, so as we mentioned, technically, in terms of actually making the investment with the developer, that already happened between mid of February, and all these entities, like for example, think of it like an IPO. An IPO came, and at that point in time, we invested into that, and now we have those securities. And as and when investors show up, they can purchase that security. So that's how the construct is. So it is already accruing the return that is due on it, which is the 16%. So now its closure, there isn't a definitive date to its closure. It is when we finish up selling this balance 15 odd crore that is there. So out of the 40, about close to 25 is, or 24 is almost done now, between investors who have already taken and the position that we will hold. So whenever this balance gets finished, which in our view is over the next 10 to 15 days, I think then this opportunity will not be available for investment.
Okay, so we are closing soon enough. Ashish and Sahil, I'm going to open this for audience questions now. And I already have a request, and I've made Naveen the speaker. So, Naveen, you'd sent a request long back. So, if you want, you can please ask your question now. You'll have to unmute yourself. Yes, Naveen, over to you.
Thank you. Thank you. Thanks, Ashish, for explaining everything in detail. Um, I just have few small questions on the structure. You mentioned the Cetrus Capital is an NBFC. Just curious if it has to be an NBFC mandatorily to do such deals, or why was it structured as an NBFC, Ashish?
No, I mean, this particular investment from a regulation point of view is not necessarily required to be done by an NBFC, right? We have an NBFC because we are in a core financing business, right? And therefore, if we have to buy, we prefer to use an NBFC to do that.
Okay, okay. My second question is on the security cover. The 2.4x security is all assets hypothecated, or is it only cash flows that you are referring as 2.4x?
So 2.4x as a security, what it means is uh, is the is the surplus cash flow that will be generated from this project divided by the uh, investment amount, which is 40 crores. Now, so it's really, so we look at, okay, this project as itself minus the cost, what is the surplus it will generate, and against that, what is my cover, right? So if we are saying 40 and it's 2.4x, so it's like we're talking about close to 100 crores of surplus cash coming. Now, of course, all of that cash flow is coming from the land and the project, and all of that land and the project is mortgaged to us. So even today, based on independent valuation, whatever we have already invested versus the land, that is also more than 2x.
Okay, okay. One last question, Ashish. Um, uh, since I am already in touch with Siddhant, and maybe we will speak over the due course. My last question is, what stage are these buildings in? Have they come to the first floor stage? Just curious on the stage
No, they are
of
at an
some
early
of these.
stage.
Okay,
They're at an early stage, but also because these are affordable projects, these are only G+4, G+5 structures. So they are very quick turnaround structures. And company has completed 18 similar projects. Typically, they end up finishing these kind of projects over a cycle of 2 years. And the sale also gets completed over a similar cycle of 2 to 2.5 years. So we have enough and more time to complete these projects and get out.
Thank you
thanks,
so much,
Ashish.
Naveen. Thank you.
Thank you, thank you.
So I've made, I think, ISKCON DIL the speaker. So please go ahead and ask your question.
Hello, I have heard the conversation, a bit late, though I was able to join 15 minutes late. Maybe I missed out on some initial aspects, but my questions are after hearing the conversation, I think most, or 50% rather, I would put it as the conversation was more on the basics of financial instruments or the differentiation between them and their nature and characteristics. I would like to get details on the project itself rather than on the debenture rooted sourcing of funds, which is your motto. I'm more betting on through debenture or directly on the project itself as an investor. So I would like to see what is it that is getting constructed, where is the location, what are the prospects around it for appreciation, what kind of a rental yields that particular location may offer going forward, in terms of the 5 year down the picture, how does that location would develop as an infrastructure itself, so that would give me more confidence before getting into a debenture mode or directly as an investor mode as well. So if there are any uh, sort of, let's say, documentation related details around it which may be shared either through the WhatsApp distribution list or any other mode, I would be really happy to go through it. Thank you.
Sure, Iskon. So we discussed a little bit about the detail, and we have limited time to go through too much detail on this one. But high level, yes, it is a fixed return. So it's not a rental yield or that, but there are four projects that aggregate to 5.2 lakh square feet. All these are already in locations which are fully infrastructure-wise connected. Uh, Two of these projects are in the industrial belt of Chennai, and two of those are in the IT belt of Chennai. But a lot of this detail that you requested for is all available on earnest.me. If you will go there and if you will just register yourself and log in, you can download a note which give you details of the location, what is the infrastructure there, which gives you the Google coordinates, which give you the math, which give you the thesis. So you will get a lot of it. And once you register and log in, you also get assigned a relationship manager with whom you can schedule a call. You can reach him on his email or his phone number.
Yeah, so I think what Ashish is saying is that simply go on to earnest.me, register yourself there. You can find all the details that you're looking for, all the documents about the project, the coordinates, the Google coordinates, and everything. Ashish, I'm just repeating because your voice cracked a little and I sort of got what you were saying. So, yeah, so or you can another option is you can drop in a DM on the earnest.me uh, uh, Twitter handle and with your email address or your queries, and somebody from the team will get back to you. So definitely there will be somebody who's going to be in touch with you and answer all your queries, since we're already running a bit late. So I hope is that's okay. Is that okay?
Yeah,
ISCON-DIM.
sure,
Yeah.
sure. Thank you. I'll go through the website. Is that dot me what you call it
Yes.
as? Is it a Middle East
Earnest.me.
registered company or how is it?
No,
I
no, no.
would
It's
think
No,
just
so.
no.
it's just a domain. I mean, when we thought of it, like it's earnest earnings nest for me personally. That was our thought process. As simple as that.
Sure, thank you.
Yeah. So and the Twitter handle is earnest_me. It's also as a speaker over here. So yeah, for everybody's convenience. So Murtuza, please go ahead and ask your question.
Yes, thank you. Actually, I have gone through this kind of opportunity on a fixed income on real estate. I have a couple of queries. One thing is that I think it's open to the all the investors. Currently is open only for India because I'm based on Kuwait. So either it's available for the NRI also, and on NRI perspective, what is the requirement is required? Like you require only the what kind of due diligence required for NRI and the tax purposes. Let's say the tax is scheduled on particular like whatever the tax structure on this kind of investment will be there.
Yeah, very good question, Murtaja. So unfortunately, this particular opportunity is not available for NRIs. So I think we are working on the regulatory structure which will allow NRI participation going forward on some of the opportunities that we create in future. But this particular one is not available for NRI because regulations don't permit. Only domestic investors can invest in this one. But that's on our list because we have received a lot of interest, and it is not very difficult to allow for NRI participation. But we need to create the instrument under that regulatory framework, which this one wasn't done. So I'm sorry that unfortunately, we can't accept NRI money on this opportunity.
Okay, thank you.
Thank you, Murtuza. Pallav, I've added you as a speaker. Please go ahead and ask your question.
Hello. So thank you for the explanation. So I just wanted to know if I invest with the horizon of holding to maturity, but for some certain reasons I need to redeem it. So what are my options available?
Yeah, I think it's a good question. We spoke about it briefly, but that's right, Pallav. If you need to redeem, need to transfer it, redemption will only happen as and when it is scheduled by the company. But if you do need to transfer, we will help you find a buyer. Because of course within our own platform within this particular deal there are enough and more number of buyers. At the same time, it's just our effort to get you that buyer. We can't promise it, and therefore you should only invest keeping in mind this is a liquid. What we are also working on as phase 2 roadmap is to make this process a little bit more efficient by by creating a tech solution around it, but that's in the works. So simple answer, ideally, don't invest if you know you will need this money sooner. But if you do, and for some reason you do need to get this liquidity earlier, do reach out to us and we will try.
Right, that's answered. Thank you.
Thank you, Pallav. Ganesh, please go ahead and ask your question.
Yeah, hi, good evening. Thanks, Ashish, for briefing us the opportunity. So I just have I just have two questions. I think one, both of them has been partially answered, but I just wanted to be very sure of it. So one thing which you said is that you guys are looking to invest into early stage real estate projects. Is that right?
Not really necessarily. We are looking to invest only in early stage real estate projects. I mean,
Okay.
when we look at it, what is the cycle from the point we invest? We
Uh-huh.
typically want those projects to get completed in a max of 3 to 4 years, right?
Right.
Not have a horizon of 7 to 8 years. Now, while this project in itself may be at an early stage, but given that it is a very low rise portfolio of four small projects, we know that this is going to get completed in over a 2 to 2.5 year time frame. Therefore, we are comfortable. So we kind of look at what is the time. So we are looking at projects which are more mid stage. It could also be some situations where it is advanced stage and there is a reason why that project still needs money, etc.
Right. So, in connection to that, my next question would be that I know these kind of products are very much defined under RERA. Just wanted to understand: is there a time limit which is specified by the RERA laws that a builder has to complete a project in a stipulated time, or no? Well, obviously, once you get into an agreement with as a buyer builder buyer agreement, that stipulation is there. But just in case, I want to understand: is there a limitation in terms of completion of project also? Because if that is the case, then that will also give me a little bit more confidence in terms of putting money into these this kind of an arrangement or probably instrument.
Yes, absolutely. I mean, when you register a project and before you can get your RERA registration, as a part of your application, only you have to specify when you will complete this project. And I think the developer is entitled to seek up to 1 year extension, but that's
Mhm.
how the law works. Sahil, correct me if I'm missing any point here. Huh?
No, that is correct. And liability is, for busting some of these timelines are pretty severe on developers. So yes, your point is correct that RERA works in our favor as investors.
Great, perfect. Another question is that, sorry, so just last question. I'm sorry, I'm taking too much time. These securities which you guys are talking about, what kind of securities or collaterals, probably that would be the right word. What kind of collaterals you guys are having for any investment you're looking at? Is this so like you were talking about land and property? So I hope it's not in the same project where you are funding, because if you are having the collateral of the same land of the project which you are funding, it doesn't make sense, because that's if something goes something goes wrong, everything falls like a crumbling cookie.
No, Gautam, it's not like that. So basically, the way to think about it is that we are investing into four projects, which
Mhm.
is aggregating to about 5.2 lakh square feet. When we look at our math, just the completion of about 2.1 lakh square feet itself will 100% exit us. So there is almost 3 lakh square feet which is behind us, and that is also spread across four different projects. So let's say even if one project is running slow or not working, etc., there is enough and more buffer coming from other projects, and that's how it kind of works. So the whole security, the whole package. So we have looked at the whole package. We have looked at how much buffer we have, and that is how we have made the investment from Certus Capital itself, right? And this is what is presented so for people to co-invest.
Okay, perfect. Thank you very much, guys. Thank you very much. Thank you, everyone.
Thank you, Ganesh. Thank you. Ashwin, you can please ask your question now.
Good evening. As an investor, I just wanted to know what is the documentation process and what documents would I receive once I have invested in the project?
So, no, I'll take that. The as far as these are dematerialized or demat NCDs or debentures. So once you invest, these these debentures will be credited to your to your demat account, and like let's say a bond that you would own, all these tax-free bonds, the interest and principal for these for these instruments will be credited straight to the bank account that is linked to your demat account. In terms of documentation and process, there is there's a simple KYC process that you need to go through on the website. It takes less than 15 minutes to complete, and subsequently, the platform itself will has a simple process where what step one is, it'll give you the details of the exact amounts in the bank account to be funded. Once this is funded, there's a securities transfer form, which is to be e-signed, and post that, within a period of 3 working days, the NCDs are credited to your account. So that's in terms of the documentation and the process. Being dematerialized debentures, issued, all the documentation is done. When I say documentation, all the security documentation and the terms of the debentures, all of those are recorded in agreements entered into between the debenture trustee, which is the IDBI Trusteeship Services in this case, and the developer. And the debenture trustee does this for the benefit of all the investors. So all the investors do not have to enter into the underlying documents. It is the same in case of Certis Capital or NBFC, like all other investors.
I hope that's okay, Ashwin. I've added Unpin me as a speaker. Please go ahead.
Hi, Ashish. Thank you for sharing the wonderful opportunity. My question is pertaining to the value of the collateral. So, if you can share with me, what is the current value of the collateral that is being put up against the investment? That is my first question.
So basically, as per an independent valuation done by a reputed agency, CBRE, the valuation of these lands is about 59 crores, and and that is just the land, and most of the money, 26 odd crores out of this 40 odd crores, is going towards the construction, so that gets added. So if you look at it that way, against the 14 odd crores that we provided, which went towards refinancing what was the existing loan, you had a independent valuation of about 59 crores. That's not our internal valuation. That's what has been provided by this firm. And then as you invest, of course, the overall value of the property appreciates.
So, but that appreciation would be at a future date, right? Over a period of time. It is not at the moment of speaking. It is not that. It is at a future date.
No, it's not. I mean, basically, as you start constructing, one, you are putting in that much value in the project in itself. And so the house has a certain value, which is very different from just the cost of it.
Right.
So you had more than 3x on the land itself when you went in. Then you are
So, is
putting
the
in the
entire
construction.
land parcel being collateralized? Entire land
Yes.
parcel is being collateralized?
Yes. The entire land parcel of these three projects are fully collateralized, and for the fourth project, all the development entitlement, that's how the legal structure worked on that one, has also been collateralized.
Okay. And are any personal guarantees involved from the promoters?
Yes, there are 4 key promoters. All 4 have given personal guarantees.
Sounds good. Sounds good. Okay. Thanks a lot, Ashish.
So I think I think we are almost reaching 10 past 5. I do have another request, but they're actually from the same people who already asked. I'm going to have one more question, Ashish, if you allow, and I think we can close after that.
Sure, Shaina, that's fine with us.
So please go ahead and ask your question.
Hello.
It's Khandelia. Yeah.
Ashish, as an industry professional for so many years, I have a very general question. With the technological disruption happening now and getting more significant ahead, especially with AI and blockchain. Uh, and basically, that would result in a consequence of people losing a lot of jobs, especially in those smaller ancillary areas where the entities used to act as a middleman. So people would land up losing their employment. That is one aspect. And second aspect is, as if we see the history of real estate as industry, it has predominantly flourished for the sole purpose of work, whether it is self employment or employment through a corporate entity. So, when this would get disrupted, how would real estate as a sector flourish going down the line, 5 to 10 years ahead? I mean, I personally speaking do not see it to be very bullish unless and until it is purely for self occupation. But other than that, the kind of appreciations we have seen, probably that would not be required, because now pandemic has also taught us work from home is quite possible and plausible in most of the industries. So except for barring few exceptions, how do you see that happening or play, uh, you know, uh, uh, going forward? Thank you.
I think that's a very, very good question. And the point really is that actually the two sectors of real estate that continue to do therefore very well, not only in India but across the globe, is actually residential and warehousing. So where the disruption has happened is, of course, retail malls in the West, especially, have gotten disrupted massively and have suffered a lot. Offices have come under a bit of a scanner because of this whole work from home, though most of the dust on the work from home, especially for countries like India where homes are smaller and all that, is settling. But yeah, but offices have also suffered. But during the same period of time, residential is now doing exceedingly well. Like if we will look at last year, whether it is sales, whether it is performance of listed real estate stocks, all of them have been through the charts. So point number one, I mean, the housing need is not going away anywhere. And in fact, we like these markets because here the housing need is not speculative, it is driven by end users. To the point of people losing their jobs, in fact, it is kind of quite the reverse. Like IT hiring in that sense is through the roof. And a couple of these projects that we're talking about here actually rely on IT hubs of Siruseri and all that in Chennai. And that hiring is through the roof, right? Similarly, actually, your automobile, your industrial production, and all that is also not bad. In fact, most of those parameters and the way people are looking at it, they're all likely to do quite better. Capex cycle is going to be strong, which is again what is in the industrial belt. So to that extent, we don't see. I mean, I would worry a lot about it if we were investing into areas and sectors where people were speculating on any real estate. And there, I agree to your point. I don't think we should think of real estate as a speculative investment. We should think of it as a consumption item, and it should appreciate at a reasonable level in line of inflation, a little bit plus minus to that. And that's our thesis for these homes are like 4,000 rupee homes per square foot. They're not fancy homes. They are providing a basic need of housing that is there. They get the benefit of PMA, Pradhan Mantri Awas Yojana, etc. So I think to that extent, we do feel quite good about these things.
Thank you, Ashish. So I think we've come to an end of this session. Once again, I'd like to tell everyone who had more questions or have more queries about this particular opportunity. This is a fixed income investment opportunity by Earnest.me. So if you log on to their website, which is earnest, EARNNEST.me. You'll get all the details you want after signing up. And you can also tag them or DM them on their Twitter handle, earnest underscore me, and somebody from the team will definitely get in touch with you. The opportunity is closing soon, so go ahead and share whatever your queries are, and I'm sure it'll uh, they'll be very, very happy to clear it. In case you cannot get in touch with them, you can even send a DM on the FinMedium's message, DM, Twitter DM, and we'll be happy to connect you with the Earnest team. So thank you so much, Ashish, and thank you so much, Sahil. You guys have been really open and candid and very honestly answered every question. And I hope it added a lot of value to our listeners who've been there. It's already 10 past 10. And so thank you everyone who actually came in to listen to this session and participate in it. Ashish, any closing words before we say goodnight?
No, just thank you to everyone, I think, for patiently listening, and thank you, Shaina, for moderating it so well and hosting us here today. So thanks everyone, and as Shaina said, feel free to reach out if you have more interest in exploring this. Thank you.
Thank you, Ashish. Thank you, Sahil. Thank you,
Thank
everyone.
you.
Good night, guys. And also, the recording of the entire session will be available on our handle. So, in case you missed a part of the session, you can always go back and listen to it. So, thank you. I'll end the session now. Good night.